We've mentioned it a couple times here. Tesla last night, surprising markets are, I don't know if it's a surprise, just doing a thing. Stock split, 5-for-1 stock split. Tesla shares right now above $1,500 a share. Dan Roberts, that means they're going to be above $300 a share in not too long from now. We've said for so many months that Tesla, I guess, turning a profit, probably going to be added to the S&P. Maybe they should be added to the Dow since the stock price is going to be a little bit more modest, although perhaps they would have had to go for maybe like a 15-to-1 stock split to get themselves into the blue chips.
Well, it's so interesting, isn't it? And a little bit, we have enjoyed talking about the Robinhood element in the market over the last, 2 months. One aspect of that has been fractional trades, fractional shares on Robinhood. And there has been a theory that has brought more of the dumb money, does that mean to say, should we use a different phrase, the retail investor, the young investor, the new stock market investor into the market, because they say, I've always wanted to own some Berkshire Hathaway, too rich for my blood, but I can buy a fractional share, fine. This sort of flies in the face of that. I mean, if you're Tesla and you think that there's really something there with fractional shares, there's really no reason to do that. And it doesn't really create that much additional value. In many ways, I have a little bit of a take that Musk is kind of playing around, right? He's trolling, he's having some fun. It's like you just said, they did a thing, right? And Tesla likes doing a thing. And in some ways, if you're a Tesla bull, you probably become sick of hearing the people who just look at the stock price over the last, 6 months or a year and say, well, this is ridiculous, it's getting out of hand. And so in some ways, it sort of addresses those people, right? Say, okay, are you happy now? Now it's down to this number. Does that look more feasible to you? But hypothetically, if you think that the stock surge has been merited because of the gains and the wins that Tesla has had, then there's no reason to think that it won't continue to surge even after this kind of momentary reset, right?
Yeah, I mean, it raises an interesting question, which is, I mean, I've read about this before, and I don't think I know the academic literature is not settled on it, but it's the question of how much does the price of a share of a company matter with respect to the performance of said stock. Now, I think over the longest term, the math would tell you it can't possibly matter, right? Because it's arbitrary. It doesn't, the value of the business has nothing to do with the price per share, because it just matters on how many shares are outstanding, and you can set that at whatever number you like. But the fact that Tesla is rallying today, I think just shows that it does matter a little bit. And I think I'm more persuaded, as you are, by the Robinhood element of it, Dan. But there's certainly there's certainly some fertile ground there with respect to how companies and managements can create artificial demand for their shares if they just change the amount outstanding. We see this all the time in the micro cap penny stock space, but it can matter, I think, even at the macro level where you have millions of investors watching the stock, you can still see these sorts of things happen.
Well, and in addition to how much does the current price really have anything to do with value and how much should it hypothetically affect trading, there's also really an abstract sort of emotional impact, right? I mean, I would say that sometimes buying begets more buying. I mean, you watch a name like Apple sometimes, and it seems like it's surging forward regardless of recent news, regardless of another 5G iPhone delay. And sometimes it's like, well, it goes higher and that brings more people to the table and they say, oh my goodness, and then it goes higher again. I mean, you see that with cryptocurrency trading sometimes. Bitcoin catches a bid, it's going higher. Instead of it quickly resetting and getting more realistic, it gets a little more unrealistic first, right, before it comes back down to earth. But then, of course, that's the game of the stock market, because if you think that something going higher attracts newbies who aren't really necessarily experts to buy, well, then, getting quick before the fun ends, or I guess get out quick. The other thing, one more thought on the Tesla news, I think it's a company that just likes to be in the news, right? It's like you said, did a thing. It's like, let's do a stock split. I mean, you can almost imagine the kind of hasty discussion that was had at the executive level. I think Tesla likes to make moves and make news and keep its name on the minds of investors in Wall Street.
Yeah, and I think if we want to go down that route, which I would tend to agree with, certainly Elon Musk enjoys being in the news, even though he thinks the media is stupid. I think the corporate finance department at Tesla definitely said, all right, if we split our stock, we're more likely to be added to the S&P. And I think that really that's the read through on today's action is more people are buying the stock because more people will have to buy the stock if it is indeed included in the index. And so that kind of is the logical through line on why the stock is rallying on something that doesn't change anything about the company's prospects and is just, as we've said, a thing that happened.